Namaste, friends. Welcome to this webinar to discuss the ongoing Iran-US crisis and what should the investors doing in this kind of scenario. I have with me my colleague who is there with us from the NRI dealing desk, who will ask questions on your behalf so that whatever questions and answer that we do, it is done in a manner in which it is easy to understand and doesn't get monotonous. So Ritesh, welcome.
Thank you, sir.
Yeah.
Would like to start with, sir, can you just explain what is exactly this Iran crisis is, sir?
Okay. See, Iran and US have been at loggerheads since 1979.
Okay.
And so to say that it is the only country which is among the Muslim countries, apart from Pakistan, which is nearer to producing a nuclear weapon. So the US and the world nations didn't want, so they entered into an agreement in which they said that if you help us sign a deal in which you don't process your uranium beyond a certain point, we'll stop uh, the will allow you to trade medicines and other field and export your oil too.
Okay.
So gradually the things developed. That was signed under warm, but then things developed adverse, and one fine day Mr. Trump quashed the deal. Now, after the general was one of the Iranian generals was attacked, he was key general.
Yes.
And he died. And thereafter, Iran has vowed to take revenge.
Okay.
Now, Iran can take revenge in many ways. It can stop the crude flow from the Strait of Hormuz, in which 50% of that portion lies in Iran. The second thing is that Iraq, which is the second largest producer of OPEC, is under the influence of Iran. It can also temper that production, and crude prices world over could rise.
Right.
So, in the sense that we could see that the crude prices could now go up further, and they're already up 3% or so. So, in order to ensure that it doesn't happen, the world powers are trying to set things in order, so they're trying to bring peace to the table. But this is something which is not going to easily happen. It will take some time.
So you talked about crude prices, sir. So how high can the crude price go from here, sir?
Okay. Let me take you to the last year.
Right.
Okay. Last year, the crude prices went up to something like $66.6 a barrel. I'm talking about the NYMEX crude, WTI crude. And year before last, in the year 18, the prices had gone to as high as $77.80 per barrel. To what extent it can go will be a function of what does Iran do. So in case it is the Strait of Hormuz, if it is captured and production is not allowed, mind you, Strait of Hormuz, 50% of India's requirement of crude comes through that route. If you talk about the world, almost 30% of the seaborne crude that happens in globally through the sea passes through that route. So it is very important. What is important is how long can it happen, and when can it start flowing again. So the quantum, the number of days it is not available will be the deciding factor.
Right. So I mean, so this kind of a uncertainty, I mean, what is this kind of uncertainty that we are facing, sir?
See, the current thing is that you already know that the general has been assassinated, and therefore Iran will now retaliate. Yesterday his funeral was there. So, but Iran would like to attack and choose the place and time of choice. Then only you can impart a lot of, let's say, damage to the enemy.
Yes.
So when will Iran do? That's not known. Where it will attack? That's not known. It can also attack the Saudi facilities, which it did last time.
Yes.
But the difference is this: that last time when it attacked Saudi facilities, we very well knew what was the damage. Damage was 5.6 million barrels of crude capacity gone down.
Yes.
Okay. Then Saudi Arabia told us we'll bring back production in 15 days. So you know very well what was the quantum and when will the production be restored.
That's right.
Now this is a developing story. What Iran does, what America will do, and how then that retaliation happens. So it is an ongoing story. But our experience tells us that the worst scenarios rarely happen. But as investors will, or as traders, will have to take that into stride and move on. So that will call for a lot of hedging strategies by investors who understand. Otherwise, hedging comes at a cost. So you should be fully aware about how to hedge your positions.
So one of the important question arises still: what time should the investors worry about this kind of a situation, sir?
We have the Republic Day on 26th of Jan.
Yes.
That's a holiday, and otherwise also a Sunday as well. So I think after that we'll be off to looking at our budget because budget will be nearing first of all. So till that one of time, when the going is, when it is known that the the incident is very new, so till that one of time, it is on the front radar. But after a few days, it might go back. It will again bounce back when such an eventuality, if at all it happens. Now, Iran very well knows that a formal war is not required. The way they took out the general, okay, General Soleimani.
Yes.
So these days, it is not necessary to send your troops on the feet on the ground. Through this new weaponry of what they use, it is very much possible to attain their targets. So I think the measurement, the retaliation of Iran will be measured, and by all account, it would not like to escalate the matters further because it's the Russians, the Chinese, and the European Union have not supported it unequally in so many words. Right. So the reliance. So at this point of time, Iran is not getting that kind of a confidence from the other group. So we think that it might be a mellowed down response.
So I mean, wherever crude oil prices basically go up, so one question that is asked: should the investors look at investing in upstream oil companies like ONGC, sir?
It is normally to understand if the crude price is going up, the companies that are producing crude oil will also go up. Right. But it might be a trading idea, but it's not an investment idea at this point of time. Very clearly, because so far, I mean, it might add capacity further, but so far, ONGC hasn't done that good. It has not added many barrels of oil. Whatever it has added, it has added through subsidiary ONGC Videsh, and that too is in an area where it is not easy to produce. So I would not suggest to going into this because this is a short-term measure. Investors would rather look at the long-term stocks.
Then what about the oil marketing companies?
Okay. See, these oil marketing companies are a good value. Okay. BPCL is likely to be sold off, and in a manner in which it is going to have a auctioned in a manner in which the better value comes to the government. So when that is strategically disinvested, the other companies like BPCL, sorry, not BPCL, HPCL, Indian Oil, their company, their value can also go up. So these are good ideas, but the catch here is, Ritesh, that this quarter the margin of the refining companies is going to take a beating.
Okay. Margins.
Yeah. So unless the view is the slightly longer term, I don't think you should be looking at, or unless they fall something like 10% or so, at that one time you might want to look at them.
Then, sir, I mean, so which sector should investors actually look at this scenario, sir?
Okay. We have given enough number of stocks to our investors to look at. Recently, we came out with the 10 companies which should ideally do better in the next 3 years or so. There is a good amount of visibility. Okay, I'll talk to you one or two stocks about them. One thing that you're very sure is that the chemicals as a sector and commodities will do well this year,
Okay.
and the small caps will also do well. Okay.
Yes.
Even in the current year, when you look at the while the in the calendar year 20, while the index has gone down by 0.9%, the Nifty per se, the mid cap index has fallen only 0.5%, less than Nifty,
Less than Nifty.
and the mid cap has risen 1%. The small cap has risen 1%. This is a trend which you have been carrying over from the last 2-3 months of the calendar 19 also. So the one or two stocks that we will suggest out of them is, one is we'll look at a stock called Sudarshan Chemicals. Now this is a company which has done really well in the last 10 years. The now average sales have gone up by 10% CAGR every year over the last 10 years. The net profit of the company has gone up by 20% CAGR. And the share price of the company has appreciated, if cumulatively you look at, a 30% CAGR. Great. What does this company do? This company essentially makes pigments which are used in paints, plastics, and other inks and other things. It is currently the number 4 in the world. If you rank them, it's number 4, and it's the top ranker in India. 55% of it's consumed locally, and the 45% is exported outside. We believe that in the years to come, next 3 years, while the sales will go up at a compounded rate of CAGR 14%, the net profit could go up by 29% CAGR, better than last year's. And we believe that the fact that better margins will happen, newer compounds will come out, and the margins will expand. It's a good stock that is to be added at the current level and added more when it falls further. I think investors can definitely expect a return of 25% CAGR over the next 3 years.
Okay. That's quite impressive growth.
Yeah. Another stock that we talked about, it is the stock from our retail boys, Deepak's choice. ICICI Bank is a stock that has done extremely well last year. Now it has seen the worst part. While other banks continue to do with the change in the leadership, which may happen with others. Here is a bank which is the leadership issues are completely behind. Yeah. They have a new leader, and the new leader has proved himself. Okay.
Yes.
Secondly, it is in a phase where whatever profit it earns, it will be able to take that profit to the bottom line. No provisioning will be required to that extent. Okay, so whatever provisioning had to be done is already done. It has the highest provision coverage ratio among the banking sector. More importantly, it has increased its retail loans from 42% to around 62%. That forms the overall the total loans. So retail segment is under focus, which it wants to increase further. The NIMs of around 3.6%, and this is a stock which can do really well. So we can confidently go out and buy the stock at dips. Okay. And similar kind of returns. So although we expect the profit of the company could go up as high as 86% CAGR for the next 3 years, putting a ratio of just 30% return per annum is a safe thing that I think we can do. Right. So investors need not worry about the ongoing crisis. It will impact. Markets have to move, they'll move up and down. But they don't really have to worry that what will happen in the very, very long term. Yes. Okay. So these stocks, if water dips, can be your good portfolio. We can utilize this time in terms of buying this. You can see it as a God-sent opportunity to buy these stocks.
So we discussed about investors, but what should basically traders do at this juncture, sir?
Okay. While it is very difficult to say that till what time you should be very, very cautious, but the fact is that it is a developing story, and while you may carry over positions overnight, yes, you might read in the newspapers or see on television news flashing of a missile attack somewhere and crude capacity going out of stock and all that can happen. So that will mean that you can't time it, you can't know. So till about we see some sense, till we have the budget out of the way, I think it's or till 26th of Jan, as I've said earlier, it is better to not to carry over positions, and if at all positions have to be carried over, they are best carried over by virtue of options. And investors, if they are using margin money to buy these kind of stocks, I think the long-term investment bets, which we have suggested, they can very well invest in them. Even in margin money, they can very well invest. No issues. So I think if you're an investor, you can take the opportunity to buy the stocks lower. And in case you're a trader, you should be slightly nimble-footed, or be or ready with options. So I think it's a meanwhile you can trade intraday and also carry positions if at all you need to carry through options.
Generally, we have seen quite a lot of these investors traders do track Nifty index as such. So, what are the support and resistance levels for Nifty, sir?
We saw the Nifty closing at 12,060 today.
Yes.
67 points up. I think we need to look at 12,005, which is the level low which was yesterday.
Okay.
And before that, maybe 11,974. 12,005 is today's low. 11,974 is Monday's low. Another very good support is there at 11,800. That I don't think can break. Okay. On the higher side, we've already made a high of 12,294. If that is crossed, hopefully after a week or so, it will be great, because then some of the uncertainty would have probably been reduced.
Yes.
And near to the budget, we could see better markets ahead. Okay?
Yes, sir.
Thank you. Are we taking any questions? Is it a good to invest in gold at this point of time? Okay. Right. Last question we're taking. I think gold has done pretty well. Gold as an investment will do well for the year also. But investing gold now at this point of time when the oscillators are overbought in a situation, I think it is not a good idea for a trader to buy at this point of time. The better returns could come by way of virtue of options you do in stocks. That's the better route. But 5% of your portfolio can anyway be allocated to gold, and whatever gold requirement that you have for your family, I think that can be really be done. That can be to the extent of 5% it can be bought.
Yes.
Can short Nifty to hedge positions. Okay. A logical question: can Nifty be shorted to protect your portfolio? If your portfolio consists of the Nifty stocks in the same manner in which the weightage is there in the Nifty, it's a very ideal kind of a strategy to apply in times like this. But my sense is that the portfolio of the investors will be very different from what is there in the Nifty.
Yes, sir.
So therefore, if you have those stocks in a larger quantity where you can write calls, so I think at this point of time, having a lesser profit but writing higher calls in the stock that you hold may be a good idea.
Yeah.
But that you should be doing with your investment stocks. That is can be done with the trading stocks. But mind you, in a traded stock, when you write a higher call, you obviously cover some part, you get some money irrespective, but you have the risk of the stock tumbling down. So it's not a complete hedge, you're only hedging part of it. So along with that, if you're buying a distant put in the same stock and using the money that you have earned from writing a higher call, to that extent, it can hedge itself.
Yes.
Okay. Thank you, friends, for being with us and joining us at this at 4:30 seminar, and wish to see you in the next month after the budget. Thank you.
Thank you, sir.